Hi, this is Mark with my analysis for the week commencing the 30th of April. Now, suggested last week that things could go into ranges and not too big a move because everything is waiting for this week. And this week is the big news event of the month anticipated, and the markets are especially waiting to see what the Fed have to say about future rate rises, whether there's going to be a rate rise on Wednesday, and as equally important, whether or not they intend to carry on raising rates. So the press conference after will also be very important. As ever, keep your eye on news. There's a few half decent articles in here from Forex Factory, and I'm going to show you some other more detailed articles I recommend that you read on fundamentals. Last week there was mixed news coming out of the US. You've got consumer confidence was down, then you've got unemployment claims were slightly better, slightly lower than expected. GDP growth down, a big concern. As you know, the three fundamentals that generally influence the value of a currency is growth, inflation and interest rates. Well, at the moment, inflation and interest rates are all over the place, so growth is the big thing. And if the advanced GDP for the US is bad, that ain't good for the dollar. Then we had CPI, core price index, came out as expected, and the employment cost index came out slightly higher than expected quarter on quarter. So for the week ahead, bank holidays on Monday in Europe, May Day, the old workers' holiday, so it could be slow for the euro and the Swissy and the pound. However, there is yet another bank, looks like, in the US that is going bust. And again, I showed you the other week how these things, they always happen on a weekend. The other month, last month, Deutsche Bank was on the verge of a run, and suddenly over the weekend things happened behind the scenes and it all went very quiet. But now you've got First Republic Bank, some of the bigger banks, JP Morgan and I think it was Goldman, put in 30 billion to try pop this up last month. That's gone. So already this year there are some significant moves, and those of us who traded and lived through 2008 will recognize the clues that it could be that we're on for a crash. So for the week ahead, the Monday is fairly quiet, we think. Aussie cash rate Tuesday, so if you trade in the Aussie dollar, that's obviously going to be important. Big New Zealand news as well, and then the big event of the week. So for me, on Wednesday, I will not open any new trades until this lot comes out. And I may even wait for London to open after the event, because there is the potential for this to go crazy one way or the other, and then by London the following day be back to where it started. So this is the big event. Do not be opening new trades around here, guys, is my best advice, because it will be silly. The spreads will widen and price could well go all over the place. And then Thursday you've got the ECB, so then you've got their monetary policy statement and their press conference as well. And then finally on Friday you've got NFP, which we never trade. Articles I suggest that you read. This is from marktomarket.com. Very good articles. Mark was talking here on, I think it was Wednesday, about how things were calm ahead of the data. And then he explained why the yen slumped. So the dollar yen shot up finally on Friday, and he explains in these articles what's been going on. And if you want to understand fundamentals better, I recommend that you read them. This is the dollar index, and I showed you last week there's MACD divergence on lots of charts at the moment on weekly, which is a suggestion that price is likely to go back up again. But this is also a triangle pattern, and this is a very big triangle, and the suggestion, the theory from this is the dollar index, if it can break out of here, is going to go on a run back up here, or if it was to drop, it would be dropping anywhere back down here. So this is a suggestion that after all this pent-up energy and waiting for big news and things, that this is quite possibly going to go on a big run. And there's a lot of these. Now you might say triangle patterns are nonsense. Well, it happened here before. I showed you on the dollar index last time on a daily. This was a suggestion that if it broke out, it would be a 270 pip move. Initially, the original triangle was in here, but that was the measurement. So 270 pips is the theory. And what did it do? Well, it broke out of the triangle and it went 260 pips to the recent low, double bottom. So it's not all mumbo jumbo in my experience. And again, let's see, is this going to be the clue for lots of things? Oil, you could put a triangle on there. Gold here on the weekly, there's MACD divergence giving a clue that at the very least it's going to pull back here, and we're at a triple top of all-time highs just above. So again, it was a clue that price was probably going to at the very least pull back. And gold is also in a triangle on the daily. And this suggests an $80 move either in that direction, which spookily takes us back up to the all-time high, or down here, which takes us to the trend line at 61.8 fib. So let's see how that pans out. Once again, MACD divergence was a clue here that price was at least going to pull back. And silver on a weekly is still above, holding this major area of previous support and resistance I've had on here for months and months. Once again, there was MACD divergence suggesting a pullback, and here on the daily you have a triangle again. So the theory goes with silver that this is going to be a $20 move either that way, which would take us above the recent high, or $20 down here, and I would be a buyer of silver again if we get back down here at 22.60. Bitcoin is struggling but trying again to have another run at 29, and this could well go on a run if yet another bank goes down in the US. Money flowed, as we saw the other week when SVB were in difficulty, that Bitcoin had a resurgence, and that is well a possibility again. And again, you've got the triangle, so you can go through all this yourselves as well as. So for the currencies, USD, Swiss franc, best place that we had on the recent move was here on a pullback. Now we're down at the bottom. Swing counter trend traders will be interested to long here. I'm not, because I'm nowhere for the stop. But I did show you in recent weeks, we had a good trade on the CAD last week on a 4-hour. This is an area of interest to me. I wouldn't put a forward order in, but you've got 90, the whole number, huge area of potential support and resistance. And you could, if you're taking this, put your stop above the 200 or even the 200 and the 78.6 fib for a 60 pip risk for a potential 1 to 2 risk reward. However, I prefer the euro. Once again, I showed you last week there was a clue that the euro would at least pause on its move up, and I know Ashley and some of you in the forum caught this. We talked last week and said here, this was the potential short up here, and again that would be an area of interest. Now the stop is an issue here. I think the guys who took this in the forum only had a small stop the other day, but this is a potential area. The A grade for me is all the way back down here, so if we get a big move on the euro, I would be a lot more interested to long on a pullback. I have a forward ordering down here at 107 area. This is the CAD. On a longer time frame, I would be liking to long this anywhere around 133. Again, be careful with that US news. However, I showed you last week, we went down to the daily, and the issue that we had, we didn't really have multiple reasons for a stop on this pair, but the 55 in EMA was there, so it made it half interesting. But when we went down to a 4-hour, you could see that price was consolidating along this 135.30, and now we had the potential of a stop with the weekly pivot. So we took this last week at 135.30, and which was right in here, so it was almost spot on. And then from there we had the stop at the weekly pivot just below, and because we were going to risk 50 odd pips for a potential 120.30, 160 up here. And then I showed you during the week in the video, I'd move the stop to here, and then I followed this up after a news announcement. So if you can't find trades on the weeklies and the dailies, then go down and have a look at the 4-hour, or just wait for price to come to you. This is a British pound. Now the British pound, I still don't feel confident enough with this. I am from the UK, although I live in the Eurozone. The UK is in a mess, and the pound getting stronger. This is dollar weakness, not pound strength, I believe. Technically, if we get a pullback to 123, I would be interested to long this. The swing traders at the top, possibly up here, but I wouldn't be touching this personally. Here is a B grade for me. I would be interested, so I will set an alarm anywhere around 123 to long the British pound. AUD, we shorted this last week. Here on a weekly, you can see it's in a range. This area is a major support and resistance going back years that it's bouncing off. This range is approximately 160 pips. I wouldn't be in a rush to long it because I've nowhere for the stop, but at the top you have got the 55 EMA giving you a little bit more confidence, and you've also got up here, you've got the 200 EMA on a daily. So anywhere up here for the dollar, for the Aussie dollar, I would be interested because I could have a 60 pip stop for a potential 220 pip gain. New Zealand dollar, again, we've shorted this in recent weeks. I only want to short these pairs. Once again, there is a triangle here. Areas to watch are in here, or you wait for the triangle to break up or down and you look for a pullback. Aussie CAD, we took this the other week. I've got the orders still here. Remember, don't leave orders in over the weekend. This is a demo. But this was the order I had the other week where we got in here with a stop 40 pips and a potential target of 140. Had the order in again last week, it didn't fire. But again, this is 40 pip stop as I've just shown you for a potential 140 pip gain. So it's a much better risk reward than the New Zealand dollar and even the Aussie. Euro pound, again, don't leave orders in over the weekend, but I've split the order here. I have a buy at 87.30 and the second part at 87.08, I think, on the live account, with the stop just below the whole number and the 55 EMA. Again, this has been a area of consolidation and the big move on Friday. Euro pound, you can see here again. So for me, that is a buy. If this fails and drops and breaks through this lot, then you start to look for a pullback to short. Once again, these two economies are both in a mess. Neither, I believe, at the minute is better than the other. Then there's a lot of pairs, cross pairs, that have got potential big moves that I showed you last week, but they are miles away from the entry at the minute. And here on the pound New Zealand, it's 800 pips away. Okay, crazy, it's never going to get there. Well, believe me, on a crazy week like this week ahead, it's still possible. So here is an excellent 60 pip risk for a 900 pip gain. 1 to 15, you would take them all day long. And I showed you in recent weeks, there's lots of these at the minute, all with the same pattern. Notice the pattern, so we're looking for the pullbacks into areas of confluence. Pound Swissy, I have an order here, it needs to be adjusted slightly to short at 114.60, and I know some of you previously have been shorting here at the 200 and the trend line, so this would be a B grade for me, 113.60. Pound CAD, similar pattern to the other ones I've just shown you. I need to adjust this order now. I would be longing this at 163.30. Final few, you've got the Euro Aussie, same pattern. Euro CAD, same pattern. Once again, don't take them all. If one fires, cancel the others or split the risk. Dollar yen, so triangle. This is a weekly triangle. If this breaks, and it's broken now and goes, the theory is this is going to go 2,500 pips, which would take it up to 156. And we had the triangle pattern again on the daily. You've got MACD divergence suggesting a pullback. What we need here is a pullback into here, and then you have to decide with the stop how aggressive you're going to be. Either place your entry a little bit further down here and place your stop below the 50% fib. Always go below the whole number if you're near a whole number. So at 60-70 pip stop, potential 320 pip gain, and remember, it could be a massive 2,500 pip move. So interesting. Aussie yen, now I had an order last week, again, bad practice, don't do this. Left it in here. If I was still going to short this, I would need to now change this to 90.70, but that explosive move on the dollar yen suggests this could go through. If this goes through, then you can start to think about a long. I am going to cancel this as a no trade. CAD yen has made a move. Too many EMAs in here. I would prefer the dollar yen over the CAD yen. Euro yen, again, it's miles away. Pound yen, I don't like this pair, but for me, I would want to pull back all the way back down to 163. That does seem unlikely this week. Okay, so we've had strange weeks. We've had the yens going nowhere for months, and then suddenly we've had an explosive move. And with the news that's up ahead this week, it could be very, very volatile. So we will update you during the week as well as in the live training session on Tuesday. Have a great week. Catch you later.